You're listening to Why We Save, a podcast about the real reasons we do or don't save and the barriers people face along the way. I'm Isobel, and across this series, we'll be reframing how we think about saving and how we can make it work better for everyone. Can £2,000 in savings really change your life? The research says yes, and not just for your bank balance. In this episode, we're exploring how small, regular saving can boost well-being, reduce stress, and help people feel more in control. We're digging into brand new research showing the exact savings thresholds that can protect you against financial difficulty, and whether building a savings habit today can open the door to bigger financial security tomorrow. Our guest today is Sara Davies, Senior Research Fellow at the University of Bristol. Last year, Sara's team showed how our savings habits affect not just our financial well-being, but our mental health too. This year, she's going deeper, analysing over a decade of household data to find out how much in savings really protects us from financial shocks, and whether starting with small, basic savings leads people towards longer-term security. Sara's work brings together hard data and human experience to give us a powerful insight into the real impact of saving on everyday life. Welcome, Sara, to Why We Save. Thanks for coming on.
Thank you for inviting me.
Welcome.
Do you mind introducing yourself for our listeners?
Yeah, sure. I'm Sara Davies. I'm an associate professor at the University of Bristol in a research centre called the Personal Finance Research Centre, which, as the name suggests, means that we look at how people manage their money, really, within the household.
So one of the reasons that we were really keen to have you on the podcast today was to look into the research that you did last year and that you're doing some more of this year for UK Savings Week. So last year looked at establishing a link between regular savings and positive well-being and that impact. Could you tell us a little bit more about that?
Yes, well, I think the idea that having savings and saving, the act of saving, would increase your well-being is something that we would all think to be true. But I think it's really important to ensure that that is the case. And so we took a two-stage approach to the research last year. So firstly, we looked at we did a sort of evidence review of all the existing research into links between savings and well-being. And then we also, my colleague Jamie, did some analysis of a data set called Understanding Society to see if he could find any correlation between them. And what we found in both instances that yes, there is a modest but fairly consistent link between regular savings and increased well-being.
What I found really interesting about that research was how it really focused on the positive reasons for saving. So often a lot of financial services reporting is negative around the negative effects on well-being of people getting into debt, which is true, but we don't then look at the other side, and actually if you start to save a little bit, it can have really positive impacts on your well-being and feeds through into sleeping better and so on, which I think your research showed.
It's not about the number necessarily, it's about the sort of habit of little and often.
Yes, yeah, very much about the habit. I mean, it is partly about the amount, but it is also about the habit of it. And I think, as you said, I think one of the reasons having savings is of benefit is to stop you getting into debt and some of the negative consequences of that. But it is more than that, and it seemed to be maybe a little bit more about feeling in control of your money, and that was very much related to the habit of savings, not so much about the amount saved. I think another thing to be clear is obviously your capacity to save is very closely linked to your income. Mm-hmm. That is sadly going to be the case. But once you even look at people on the same incomes, those who saved regularly, however small an amount, had higher levels of well-being than those who didn't.
Could I just take a step back? You mentioned Understanding Society and that being a data set. Could you explain a little bit more about what that data set is and who it looks at?
Yeah, it's an amazing resource. It's what was called a panel data. So the same people are asked a survey every year or every 2 years to on a huge range of subjects. So what you then have is the ability to look longitudinally, so you know for sure the impact of things because you are asking the same people, what did you do, what have you done over quite a long period of time. So that's why we can say quite confidently that there is this correlation between those who save and having increased well-being, because we've looked at the same people, looked at who has saved, who hasn't, and their well-being over time.
Was there anything that you found quite surprising that came out of that study?
I think, as I said, I think more it was really confirming what you would hope to be the case, that there is something very positive about saving. And I think it's really important to recognise that it wasn't just about income. So even if you're on a low income, if you can manage to put money aside, then you will probably feel better, basically. And some of the factors that we found were increased was people felt more optimism. There was more optimism about the future. People were better able to sleep at night, and they had a higher overall life satisfaction. Again, I think it's key to remember these were quite modest. We looked at other events, for example, and how they impacted on these factors. And obviously getting married had a big positive impact. Losing your job had a big negative impact. Either starting or stopping savings was a very small impact, but it was significantly different for those who saved compared to those who didn't save.
So it makes a difference, but it's not going to be life-changing on day one.
No, absolutely not.
Yeah.
But as some of the research we've done this year shows, it's starting. You have to start somewhere, and then as you build up to more savings products and stuff, then actually you might find it does have a significant impact in your life.
Yeah.
So I want to dig in a little bit more about the kind of act of saving rather than the amount. I know obviously you did mention that the amount matters as well, but why do we think it's the act of saving that has that overall impact on positive well-being?
I think it's two main factors. So it's having a pot of money that you can draw on. So rather than needing to borrow or not knowing what to do, you've got something. There are always going to be unexpected events, a car breaking down, needing to replace the washing machine to something more serious. Having that pot of money gives you a sense of security, I think, that you have something to draw on. But I also think, as I said, it's some of the other research we looked at seems to suggest that there might be something psychologically about feeling in control of how you're managing your money. So even if you need to draw on your savings, the act of putting them aside regularly means that you feel that you know what you're doing. You know you can manage better.
Interesting.
So it's the control and the kind of having the mental capacity to deal with other things and that kind of thing, and reduced anxiety from that.
Yes, yeah, I think so. And also it can be a sense of pride. I did some research with the credit union a few years ago looking at single mothers and saving, and it was about very modest sums of money and putting them aside, but some of the participants said they just felt really proud of themselves, that actually they didn't think they would ever have the money to save, and they were on a very constrained income, but just that they were able to do this made them feel proud of themselves.
That's amazing. It's that positive feedback that people get from saving, I think, is really important.
Yes, yeah, absolutely.
Yeah, absolutely. And you mentioned income. So we all know that obviously the more you earn, I suppose the more available savings will be to you, the more attainable. Were there any other, I suppose, segments of people that this had a bigger impact on?
Well, interestingly, it was the biggest impact was for those who are on lower incomes and those who are younger, which is quite often related to having a lower income. So the impact levels were greater. For example, when we were talking about increased well-being, for those in the highest income scales, they started off with the sort of same level of those who saved and those who didn't save had similar levels of well-being, whereas in the lower income quintiles, those who saved had I think at least 13 percentage point higher reported well-being than those who didn't save at all.
So we've talked a bit about last year's research and this year's research that you're doing at the moment. It builds on that, doesn't it? So what are we looking at this year?
Yeah, well, the research we've done this year is really, I suppose, digging a little bit deeper into the extent to which having savings has a protective effect against financial difficulty. So what role does savings have in financial resilience? So in the previous research, we found that it sort of increased well-being and that it appeared to have some sort of protective effect on self-reported financial resilience. But this time we wanted to look at it in a more robust way, this particular area. So what we were looking at really is what level of savings do you need to have to protect against financial difficulty? And so we explored three different factors. So one, the extent to whether you were in arrears with your bills and so on, whether you were over and indebted or not. And by that we decided that having 3 or more sources of borrowing or borrowing from family, from friends, was an indication that you were struggling with debt. And then we also looked at self-reported financial well-being, so how well people felt they were managing financially. And what we found was that actually £2,000 fundamentally seemed to be the amount under which you then started to see a real significant protective effect of having savings.
So there's a substantially lower chance of you being in financial difficulty if you have savings of £2,000 or more.
Yes, yeah. Very approximately, both being over indebted or being in arrears, you had a 60% lower chance of either of those two if you had £2,000 worth of savings, and that was fairly steady across all income groups. So for lower income or higher income, you still needed the £2,000 figure.
And for many people, £2,000 would be a lot of money. We talked about the research we did last year, which showed that just saving a little amount often has a positive impact on well-being. Are there other thresholds that come out through the data that have positive impacts on the way towards 2,000?
Yes, I mean we found that a month's savings was another way of looking at it, though realistically it's unlikely to be much less than £2,000
when you look at average
for most people. Yeah. But also we found that but saving regularly did also have some protective effect. So I think in particular it had a protective effect against falling into arrears. So those who saved regularly were less likely, significantly less likely to fall into arrears than those who didn't, regardless of the amount. So I think the message is always the same. I mean, it's obviously good to have a substantial pot of money, but actually the act of saving will give you more control over your money and therefore maybe prevent you falling into debt or arrears.
When you say a month's savings, do you mean a month's salary? Or
yes, sorry,
sort of
a savings of a month's salary.
Okay, that makes sense.
Yeah, and so I suppose that £2,000 is, for many people, a stretch, but it's a goal to aim for, and there's these other benefits along the way of building. As you build up towards that, you still get the benefits of saving and benefits in terms of well-being.
Yes, it's. I mean, again, one of the things we discussed, as part of the research, we spoke to policymakers and providers to talk about, well, what does this mean? Because there is a bit of concern about saying to people, well, you need £2,000. That's not going to be feasible for many people.
Not to build up quickly, no.
But savings isn't just one thing. It's a ladder, really, and you have to start somewhere. And I think that's where, when you look at both pieces of research together, you start to see a bigger picture, really, which is that you have to start somewhere, and it's the act of saving that gets you on that ladder, and then you can build up to the 2,000. And what we also found, one of the other questions we looked at this year was, does having a savings account lead to other product holding? Mm-hmm. And we found that yes, there was some link. So I think if you had a basic savings account, again, regardless of the amount in it, you were much more likely to then have a cash ISA or to have investments or other products. And then we also found that having a cash ISA, for example, meant you were significantly more likely to end up as a homeowner. So all of these things are staged, and you have to start somewhere. So I think that's where the message comes from, is that you know once you get into the habit of saving, then you are on the road, hopefully, to greater financial well-being.
So that what you said about cash ISAs is really interesting. So is that cash ISAs as opposed to another type of savings account?
Yes, I'm not entirely sure why, but that's what the data said.
Yeah, that's really interesting.
But it's interesting, this pathway, and I guess the message to listeners is who don't have savings at the moment is just get started with that small regular saving, because it's starting on that pathway through different products and getting that regular saving that you've got to start somewhere.
Yes, yeah, no, absolutely. And I think that one of the messages maybe to get out there is that savings are there for spending, whether they're there for spending next month or whether they're there for spending in 10 years. The whole point of savings, it's your money that you're putting aside for when you need it. You might need it in emergency. You might need it, as I said, to pay for your school shoes. It might be a very short-term savings. It might be a couple of years, or it might be when you buy a house, when you buy a car, when you have a wedding. That's what you're saving for, is to spend to make your life better, to make your life what you want.
Different needs, different objectives, and different circumstances.
Absolutely, and different times in your life as well. So it's interesting what you said about a ladder, and I suppose kind of climbing that ladder. You need savings for different reasons in different parts of your life, don't you?
Yes, yeah, absolutely.
I also found really interesting the kind of second bit of the research you talked about there, how this basic savings leads to, it's shown in the data to lead to investments and pension saving and cash ISA and so on. So the basic savings is a real foundation for other financial holdings.
Yes, yeah, absolutely. It certainly appears to be. And I think it is. I mean, again, it's one of those things that to an extent is quite obvious, but you have to start somewhere. And so if you don't start with the small amounts and putting them aside in a savings account, you're not as likely to then end up going to the investments, getting to the bigger, and then eventually, as I said, building this pot of money for you.
Something which is a little bit different, I think. We've been speaking to other experts on saving and speaking to a podcaster who speaks to millennials, and a lot of them are investing straight off into crypto. I know this isn't covered in your research because it's not in the surveys yet, but I'd be interested in your views of, can you shortcut to that, or is that part of the reason he was saying people were going for crypto was because things are so hard and out of reach, things like home ownership and so on, that it's almost seen as a quick way to build wealth, and so it's the hope that you'll get a quick and significant return. But we're talking about kind of starting on a pathway and building up slowly, kind of very different approaches. Interested in your views on that, even if you haven't got the data yet. Yeah.
No, I mean, we just had a very brief chat about that. I mean, I think it's there is savings, I think, of which sometimes investments are, which are about building this pot of money, and then there's investments, some of which I think are a bit more akin to gambling. And I think, and I mean, I have all sympathy with younger people, because I think, life is financially far more difficult for younger people than it was for people my age or older. So I do sympathise with that. But I think, unfortunately, with savings, it is that slow but steady building, starting small, that is what you really want to be encouraging people in. Personally, I think things like crypto or gambling of any sort is, or even, to be honest, as I said, some more risky investments should only be done when you have the basics, the financial basics in place.
Comes back to that first piece of the research of, it gives you that security against financial difficulty, that protective effect.
Yes,
you get that, and then you can open up your risk appetite potentially, depending on your circumstances.
Yeah. I mean, ideally, everyone should have a pot of money, however small, to draw on when they need it, because none of us know when you're going to have to, as I said, need to get your hands on £200 or £2,000 to in an emergency.
I think what you said about financial basics is really interesting, and kind of whose duty that is. And I think there's probably an argument to say that it's everybody's duty in a way, but I'd like to sort of put you on the spot and say, for government and for savings providers, what do you think they could be doing better?
I mean, I think that, again, in the first piece of research, one of the things we were looking at was what are the barriers to people's savings, and an income aside, or sort of unable to. I think there is evidence that people who don't save, who are on a low income, there's quite a few people who could just put, even if it's £10 a month aside. But I think complexity of products, sort of accessibility, paralysis by too much choice, all of these things. I mean, I think there are some personal qualities that some people are more risk averse, some people are less trusting. So I think there's a number of things that both policymakers, government and providers could do. And I think in both, you could possibly summarise it as meet people where they are. So instead of trying to get people to join a savings account or start a savings account from what suits the provider, you need to go to where they are. There's been quite a lot of work being done testing payroll deductions for savings, and that seems to be having some really positive impacts.
Yeah.
And particularly where it's auto-enrolled. If you draw the analogy with auto-enrolment of pensions, it's been one of the major financial success stories over the last decade. Yeah. There are now a generation of people who will have a far more secure pension, retirement, than they would have had. And so you could do something similar with savings. So try and get people to get in the habit of just taking money out. So I think that's a major thing. I think from the government perspective, if you're talking particularly about people on low incomes, I think you could prioritise savings a little bit more, maybe build auto-enrolment of Help to Save.
So just to stop you about auto-enrolment, for people that might not know what that means where the default is that you're already in the scheme and you have to opt out rather than the other way around.
Yes, absolutely. And I mean, I think it's also key to say, though, that you should have easy access to that money, but that it comes out of your salary before it reaches your pocket, to speak.
So what could the government do to help people save? How could they step in?
Well, I think it's important that, particularly for those on lower incomes, that they do make savings a priority and build it into, any welfare system that they have. So, for example, they currently have a savings scheme called Help to Save, and this is where they will match savings for those who are on universal credit. So, for example, I think if somebody on universal credit put £50 a month aside, so at the end of the year they had £600 saved, the government would add £300 to that, as long as the money is kept in for a couple of years.
Wow, so 50% match, that's quite a lot, isn't it?
Yes, absolutely. And there's no reason why, if people who are entitled to that because they're on universal credit, why shouldn't they be auto-enrolled onto it? So as you apply for universal credit, at the very least you could be at least asked if you wanted to put that £50 into the savings account and have it explained to you, so that it's not a separate process.
And it's not locked away, it's instant access if they need it, but it's saved for them as a separate pot.
Yes, it's instant access. You would lose the match savings if you withdraw from it, but if you once you get to the end of, I think it's either 2 or 3 year period, then that money is yours, and obviously you have a 50% increase in it. And I think there was some research done at the time to suggest that it did have an impact, a statistically significant impact on the savings that people had at the end.
I can imagine. I suppose it's also encouraging as well, because I imagine certain people on universal credit might not know that they're allowed to save.
Yes, yeah, absolutely. And even though the rules changed between tax credits and universal credit, if you have up to £6,000 saved, it won't have any impact on your universal credit eligibility.
Wow. So there are 2 questions that we ask every guest. One a bit more serious and one a bit more fun and frivolous. Which one would you like to start with?
Serious.
Serious. So if you could wave a magic wand to help people in the UK to save more, what would that look like?
Well, I think it comes back to what I just said about automation. I think it's about making it very easy, removing any sort of friction to people saving. I mean, obviously, adequate incomes would help, I think, particularly for people on benefits, but building this idea that having a savings pot is part of sort of financial life, into any welfare system, into all the systems. I think that's what would help people save. And as I said, maybe giving stronger message that savings are there for spending, that they're just a money management tool.
Yeah.
It's interesting that we've asked that question to a lot of the guests, and nobody's yet said just raise people's incomes, because I think it shows that all of the evidence is these behavioural factors that are so important to getting people to save, and
regardless of
income.
income.
So although, as you've shown from your research, savings do increase with income, the actual distinguishing factor is something more behavioural and psychological.
Yeah. I mean, I do feel, as I said, there are a lot of people who are on inadequate incomes. So that if you wanted to do it across the board, but if we're talking just about savings, I think, but as I said, making savings as much a part of life as income, almost, that the government should maybe kind of consider that. I mean, if people who are in debt, for example, that again, one of the things that are being trialled is products that allow people to save while they're also repaying debt. It's making having this pot such a normal part of life, really. I think that idea got lost a lot in the 2000s. Mm-hmm. Probably because there was such easy access to credit. Right. And now that's dried up slightly. I think maybe we ought to go back to prioritising having some form of savings pot if possible.
Do you think that has dried up? So I'm just thinking about sort of younger people, and we were talking earlier about buy now, pay later, and how easy it is when you just buy some clothes or a sofa or something. That credit is there for a lot of people still. Yeah,
I mean, I have some concerns about buy now, pay later for exactly that reason. And I think, sadly, a lot of credit now is going on essentials, which is something slightly different. I think buy now, pay later does encourage people to spend money they don't have. So yes, I think that as credit dried, then buy now, pay later seemed to fill that gap slightly.
Interesting. And the second question is more of a personal one. So, what's the first thing you remember saving for?
God, I was thinking about this earlier. It very much ages me, but probably Cindy dolls.
Really?
Most people wouldn't even remember them. Now, they were like the British version of Barbie.
Yeah.
But they had like furniture and, lamps and everything you could buy for the Cindy house.
See, savings does lead to home ownership.
Yes, yeah.
Already thinking about it from a young age.
And a horse. Great.
Right. Thank you so much, Sara. Thanks for coming in.
That's okay. Thank you for having me.
Thank you.
Thanks for joining us on Why We Save. If this episode has got you thinking, why not share it with someone else and carry on these conversations we all need to be having? And don't forget to like and subscribe wherever you get your podcasts. It will help other people find us and mean you never miss an episode.